Hey guys, welcome to a new video. So things are not looking good at the moment. It's really kicking off, it seems, and the markets are showing it. We're in deep red. We're in overnight trading at the moment. So it's Monday daytime where I am in Australia, but Sunday night US time. And yeah, the S&P futures, NASDAQ futures are down massively, deep red all over the board. And if you look at the price of oil right now, it is absolutely rampaging up. Look at that. It is nuts. Up to $118, up 30%. Surprisingly, Bitcoin is holding up pretty well at the moment. It's just pretty flat around 66,000, 67,000. And actually the safe havens, or the typical safe havens of gold, it's down a little bit. Silver's down a bit. And then the S&P and the NASDAQ are down over 2% each. So not looking good for opening uh, on Monday morning, wherever you are in the world. So anyway, things are not good. It's awful. It's terrible. It's kind of scary times, but that's not what I'm going to talk to you about. Well, there is some elements of that because there's two new ETFs from the guys at XFunds. They've been pretty popular over the last year because some of their funds are doing really well, and I'll go into that in a bit more detail. But the two ETFs we're going to be talking about are brand new. They're called WEPN, WEPN, and NUKX with an X, NUKX. So I'm going to talk to you about those two new ETFs. I'm pretty excited about them both. I think they're both going to do really, really well, actually, over the long term. And considering the state of the market and all this fear and the deep red we're seeing across the board, it could be a good opportunity. If you've got cash on the side, if you've got a reserve amount of money, cash, then it could be a very good opportunity to get in right now. But that's what we're going to talk about. But of course, before we do, the disclaimer, this video is not financial advice. This channel is purely based on my thoughts as I navigate my own personal investment journey. Please, please, please always do your own research. So, as I said, oil is absolutely on a rampage upwards, which generally isn't a good... If you're holding oil stocks, then congratulations, you're doing well amongst all this chaos. Of course, the VIX, the volatility index is absolutely screaming. But yeah, most things are not doing well. But we are going to talk about Nuke X, which is this from XFunds, this new growth and income ETF from David Nicholas, I think his name is, the XFunds guy. And it is essentially an actively managed ETF that holds equity shares of nuclear industry companies and provides exposure to the price returns of US listed ETFs and or ETPs that seek exposure to uranium. So what does that mean? It's uranium plus nuclear industry companies plus weekly income. This is a weekly income ETF, but it's not focused on income because its primary objective is to seek capital appreciation. So primary objective is growth. Secondary objective is income through their option strategy. So like Blocks, if you know Blocks is probably XFund's most well-known ETF. It's their crypto ETF, and its primary objective, like this strategy, is for capital appreciation, aka growth, and secondary is income. And as you may or may not know, Blocks is doing very well considering how bad crypto has been for the last few months. It's beating the price action of Bitcoin. I'll just show you now because it's quite important to understand why XFunds has been so popular over the last 6 months to a year. And it's because a lot of their ETFs are really well thought out and have good strategies and try to limit downside price action, and therefore they don't have the typical NAV erosion that a lot of the high yield ETFs have, because they pay a slightly lower distribution. I think Blocks pays out around 30-35%, but it still is beating IBIT, which is the most popular Bitcoin ETF in the market, and it's beating it considerably. So if you'd invested in Bitcoin versus if you'd invested in Blocks, you would be up a lot more from your Blocks investment than just simply buying and holding Bitcoin, which is pretty impressive. It's a pretty amazing feat, and it's not by a small feat. If you look at that, Blocks is down 6.7% total return Okay, that's not great, but if you consider the price action of Bitcoin and crypto, it's actually a very good result. And if you were to go from inception, let me just see if I can do this from inception to the top. Blocks at one point was up what's that saying? 58% total returns, whilst Bitcoin was only up 15%. So if you can ride out this bear market, potentially, if you can hold through this, if you're holding blocks and you can just hold through this bear market, the upside that you're probably going to get from holding blocks, could potentially be very, very big, very lucrative. So I think it's one to watch, especially I think blocks would be a great addition for anyone that's looking to get some crypto exposure in the bear market. But anyway, this isn't a video about blocks, but I just want to show you how the kind of strategy of growth first and income second from their strategy that these XFunds guys use, and it's actively managed. So always tweaking things to make the necessary changes to make sure that the fund is performing and doing well. So back to it, Nuke X. So it holds equity shares of companies that have business activities in the production of nuclear energy, uranium exploration and mining, nuclear fuel processing and enrichment, reactor technology development, engineering and construction of nuclear power facilities, and waste management safety technologies. So really forward-thinking nuclear energy, infrastructure, energy, all that sort of stuff. Commodities portfolio. It also provides exposure to the price returns of select ETFs that have exposure to uranium, and that's Euro, which we'll talk about in a second. Options overlays. This is just using options that's the part of this strategy that creates the income. Now, of course, this is a brand new ETF. It's only been out a few days, I believe. So there's no actual distribution percentage at the moment. We don't really know what the distribution rate's going to be. As you see here, it's got quite an expense ratio of over 1%, 1.07%, but all the high yield ETFs seem to have quite a high expense ratio, especially the actively managed ones. And I would argue that for it to be actively managed, it's probably preferable for it to be that way, so that it's actively managed, so that it's probably going to work out net positive in the long run, even with an expensive expense ratio like that over 1%. But it is something to bear in mind. Okay, so no distribution rate at the moment, but blocks pays out 35%, and I feel like this is going to be something similar, maybe 20 to 30%, but we don't know yet, so no point really guessing. But let's look at the holdings. Okay, it's got a very large cash and other holding at the moment, over 20%, and I think that's just they're waiting to see how this all plays out, or I don't know what their strategy is with that, but it's something to bear in mind. It gives them what's a flexibility in terms of their strategy and which way they're going to go with things. Now, first big holding is Global X Uranium ETF Euro. Now, this is a big one because it's basically an ETF that holds all these different companies within it. And it's actually something I've been keeping my eye on because I was going to invest in it as part of my growth portfolio. If you know, I have a growth portfolio and obviously an income portfolio. My growth portfolio usually offsets some of the NAV erosion that my income portfolio sometimes gets, especially with crypto and Bitcoin and everything when a lot of those funds are down at the moment. But I just wanted to show you. So this Global X Uranium ETF is called Euro, URA, I believe. I've got it here. So we'll just go and have a look at what that's been doing, because this is basically showing this will kind of show what the price action of this ETF will be like, something similar. It's obviously not going to be exactly like this, but you can see from the past year, it's up a lot. If we were to do from, okay, this was a downtime in the market. This was when tariff chaos was happening, but up until around about now, it's up 145%. And that's even with the dip that we've just had. One second. But we are dipping now, of course. There is fear in the market. There's going to be extreme fear. I think that the fear and greed index is going to hit extreme fear in today's market in the next couple of days, whilst there's so much unknown, so much uncertainty with everything that's going on in Iran. There's going to be a lot of opportunities if you're holding some cash, if you're holding some some money to potentially invest and make the most of these opportunities. So I'd be looking at a price around here. So if Euro comes down to here, this URA ETF, you can see there's kind of a level of support right here. If it comes down to this 44, 45 mark, I'd potentially be looking to get into the Nuke X ETF because there's quite a lot of similarities. So you can that's the way I'm looking at it. But who knows? I mean, there's a lot of unknown elements going on at the moment, but that's what I'm kind of looking at for this ETF. Then there's other holdings, CEG, that's a big one. Dominion, Duke Energy, Vistra, Next, like this is all energy. Oklo, that's a big one. Next Gen, Centrus. So if you're bullish on kind of nuclear energy, uranium, future of energy infrastructure, all that sort of stuff, and I think it will do well. Going by this ETF, which has done very well over the last year, then I think that getting into these opportunities, these big dips, is potentially a good move. But I wouldn't put obviously this is a bit risky. I wouldn't put too much of your hard-earned money into this one. But that's Nukes. You can download all their holdings if you want from the website, and we'll see what the distribution is. Now, the second one is Weapon. So very apt considering what's going on in the world right now. It is the Nicholas Defense and Rare Earth Income ETF. So it's actively managed again, very important, and it holds equity shares of defense and rare earth industry companies and provides exposure to the price returns of US ETFs and ETPs that seek exposure to strategic metals and minerals, including aluminium, copper, uranium, lithium, cobalt, steel, platinum. With the price of gold and silver that's been rallying big time recently, and a lot of people think that the rare earth metals and minerals are really going to be following that kind of same price action. So it could be one to watch. And of course, there is the defense side of things as well. So it's actively managed, as we said, and there's like three components to it. So there's the equity portfolio, the commodities portfolio, and the options overlay. So that's how they generate income. But the equities portfolio is like the defense side. So this is like national defense, aerospace, intelligence, weapon systems, cybersecurity, defense electronics, and other defense technology applications, as well as companies involved in the producing, refining, and recycling of rare earth and strategic metals and minerals. So that's all your defense, weaponry, intelligence, cybersecurity, all that stuff. And it's really important considering what's going on at the moment. And a lot of these, especially like drones, defense drone stocks, they're up a lot. Like I hold RCAT, which is a growth stock, a growth position that I hold, and it's up like massively year to date. It's up, I think, 50, 60%. I could be wrong, but a lot of the drone defense, especially drone and defense, really up a lot. Okay, commodities portfolio, providing direct and indirect exposure to ETFs and ETPs that seek exposure to strategic metals, minerals, including aluminium, copper, uranium, lithium, as we said. Okay, options overlay, so that's the income side of things. So it's first is growth and capital appreciation. That's their primary objective. Secondary is their income through the option strategy. Okay, again, distribution, we don't know yet. Expense ratio, it's very similar, over 1%. It's very expensive, but it is actively managed. And I think that over time, that will probably benefit you considering some of the plays that they're going to make within this ETF, as has showed with blocks and how well that has performed in comparison to Bitcoin. That's a high expense ETF and it's actively managed, but the percentage, is worth the 1% or whatever it is, expense ratio when you consider the results and total returns. Okay, so holdings of Weapon. So you got the metals fund. So this is a big one. Well, not big, but 6%, not as big as the other ETF. CrowdStrike, I actually hold this as part of my cybersecurity, actually part of Hacky, which is an income ETF, but targets a lower distribution of 15-16%. That's a cybersecurity. If you're bullish on cybersecurity, it's worth checking out an ETF called Hacky, HAKY. And CrowdStrike is obviously one of its biggest holdings because it's very big in the cybersecurity space. So that's CrowdStrike, cybersecurity, AeroVironment, or air like Palo Alto, Palantir. Everyone knows what Palantir is, like AI software, but also defense and government contracts. On this, I hold this in my growth portfolio. This is what I was talking about previously, like drones in defense, like big drone, and lots of people and analysts believe that this is gonna be very, very profitable and do really well in the next 2 or 3 years. So I actually hold that as a growth stock in as part of my growth portfolio. So it's good to see that is one of the holdings in this ETF. Axon Enterprise, General Dynamics. Don't know what that is. Northrop. That is again, I think, defense and cybersecurity. Hold that in something else. Can't remember. I hold too many ETFs these days. Anyway, it's a good list of holdings. I think it will do very well, and it should be holding up better than Nuke X at the moment, because some of these are doing pretty well. Like Palantir is holding up okay, because obviously there's the defense and government contracts side of things. On this, it's drones, so it's holding up pretty well. So if we actually go to back to the charts and we have a look, they're brand new, but if we just have a quick look, I think I've got them here. So if we go Nuke X, see, it's just so new. It only launched like a few days ago. So it went up, started pretty well, and then obviously since then, down. It's down at $45 now. Whereas if we look at Weapon, that should be holding up better. Okay, that tanked initially, but then it's got some of those defense stocks inside of it that it's holding, some drone stocks. So it should be holding up a lot better. So it's at 48.50. So if you want something that's if you think that this conflict is going to continue on and is probably not going to end anytime soon, which is looking quite likely at the moment, doesn't look like this is going to end as soon as people would like, then this could be a good ETF, because it's holding a lot of those defense stocks and positions that will probably either at least hold their ground, if not go up in times of war, like drone defense and war weaponry systems type stocks. Whereas nukes, it's potentially a better opportunity right now. If it goes down even more, if we look at Euro, this went up initially, but it's come down massively. It's come down, let's have a look. Oh, sorry, it's come down. It's down 7% in the last couple of days. Is that? I don't even know what that is. One day maybe. But if we, like we looked at before, if we look at URA, which is one of its biggest holdings, URA, keep calling it URA. If we look at that and we just go to a year, we can see that there's huge opportunity in uranium, nuclear energy infrastructure, nuclear infrastructure, all that sort of stuff. So if you're bullish, if you've done your research and you're bullish on that sort of stuff, and it still looks, this is going to be up and to the right eventually. But again, if it comes down to here, it could be a good opportunity to get into that Nuke X ETF from the XFunds guys. So I think they're both really good options. I think with the performance of blocks, and considering what Bitcoin and crypto has done over the last year, and how blocks has managed to stay above that in terms of total returns and how well it's performed in comparison to just holding Bitcoin or holding Ethereum, I think that's a good benchmark to then see how these will do as actively managed ETFs within the nuclear space, within the energy space, and then again within the defense and rare earth mineral space. I think both are good spaces to be in. I'm keeping my eye on both, and I'll probably get into Nuke X first, because I think that the dip is more of an opportunity right now to get into. So it's one I'm keeping my eye on. And in terms of pricing, where were we? Let's have a look. Yeah, like as I said, if I'm keeping my eye on URA, and if it comes down to 44, 43, 44, I'll probably jump into Nuke X. I'll just use this because we don't have a benchmark on the price action of Nuke X. So I'm using this as kind of more of a benchmark of what I would do, how that ETF is going to perform in terms of its price action. So that's probably what I'm looking at, how I'm looking to play it. But as I said, just it's volatile times at the moment, guys. It's a lot of fear, a lot of deep red. You're doing well just to hold your positions. That's probably what I'm going to do, is just hold through it, buy little opportunities here and there. I don't have a huge amount of money because income is down. So, yeah, just trying to hold it and make it through these times, and just trying to buy up the little opportunities as and when they come in. But I'd love to hear your thoughts on these two new ETFs. Are you excited about them? Are you looking to get into them? If not, are you looking at anything else? What else are you buying or seeing as an opportunity right now? Would love to hear your thoughts in the comments. And for now, I will leave it there, and I'll see you in the next one, guys. Cheers.